Hi, I'm Brett Cenkus. I'm a business attorney out of Cenkus Law and an M&A broker or advisor out of Braaten Woods. Today, we're going to be talking about family offices, what they are, and the pros and cons of selling your business to a family office. Before we get into that, if you want to book a call with me, a paid call, you can do that at clarity.fm/Brett Cenkus. The link to that site, third-party service, is in the notes, the description of the video. So, family offices, they are a small, I did a video on search funds a while back, and family offices are similar in that they're a relatively small player in the M&A space, but a very important player. And there are unique aspects, pros and cons of selling a business to a family office. So what is a family office? Family office, very simply, is a company, right? A vehicle, but a company that is, its purpose is to manage the wealth of a family, generational wealth. So I believe the largest in the world is still the Walton family office. And so that's all the wealth that was created from Walmart, basically. And so it's a $250 billion family office, basically a lot of assets under management. And so rather than outsourcing all of the management of that to financial advisors and brokers and, basically just financial professionals in the world, they're brought in-house, right? And the family creates a company whose purpose is to manage its wealth. And so you've got people on board who are vetting investments in real estate, right? And the stock market and private equity and buying businesses, and then putting that wealth to work and managing it internally, right? And there's sole or single family offices, which are just for one family. And then there's multi-family offices where families come together and share that sort of function across their different across the families, basically. And that's just more efficient. So because the starting point for having a family office, really from a cost, where does it make sense, is $50 million, $100 million, right? We're not talking, it just doesn't make sense to put these people in place and have all this overhead for $5 or $10 million of wealth. That's not what we're talking about. We're talking about much, much, much more. I believe the number is something like, as the time of this video, $20 trillion of wealth in family offices. So I said small. What I mean is there's just not that, they don't show up on the other side buying our businesses that often, like search funds, kind of rarely, but they're out there and they're an important player. And there's certain things they're looking for in certain types of businesses that would be well suited to talk to family offices as potential acquirers. Okay, so let's talk about the pros, the benefits, the good aspects of selling to a family office, or why it's great to deal with a family office. Number one is they are very flexible, right? Family offices often have investments in all sorts of things. And in my experience, the people who work at family offices are interested in broadening their horizons and looking at different things and vetting different industries. And so I said the same thing about search funds. There's a wide variety of businesses that they'll consider. And that's not the same. I mean, it seems to be getting more, private equity is getting their hands on all sorts of things that they weren't in, 10, 15 years ago. And strategic acquirers, obviously, you're looking for a competitor here, but private equity still has, certain sort of things and certain types of businesses, traits, and industries that they prefer. Family offices are much broader. So there's lots and lots of different businesses and industries that they would consider, right? So if you got a very unique business, it might be like a search fund, that a family office might be a good choice for that. And that they typically are very boxed in by size, right? They might buy a small business, they might buy a large business. I mean, they're just kind of all over the board, really. And that's going to be a con, right? There's going to be a negative in a minute, but this is a positive in that there's certain types of businesses that are harder to sell to, and they're just fewer strategics to buy them. Let's say private equity is not interested. We're looking for different types of acquirers, and a family office may check that box. A second one is that they can move very quickly. They have a lot of their own money. There's a flip side to this, which is they can move very slowly, but often they can move very quickly. And they aren't they don't need to go raise financing. It doesn't mean they would never do that, but generally they've got a lot of what we call dry powder. They've got money there to put to work, and they can move very, very quickly. And they don't have, unlike private equity, private equity has very robust due diligence procedures, and they'll often bring in, even for small deals, even for $2 and $5 million deals, they'll bring in one of the big accounting firms, big law. You've got a lot more time and paper on a deal than kind of makes sense given the size of the deal, but that's just what private equity uses. I mean, those are the professionals that they use, they're comfortable with, and they don't care if they're spending a little bit more. The budget for this particular deal is a little out of whack with the size of it. It all kind of works out in the end. Family offices, in my experience, are not, they just don't have the same level of due diligence, let's say. It's not to say they're not going to ask you any questions and do a process, but they're more flexible. They're less robust. So they can move quicker and they're just easier to work with and overcome certain, issues. They're, I guess it goes back to the first point, which is they're just very flexible, and that can be very, very helpful. A third is that they are usually a pretty good buyer from a price perspective, right? They tend to look at their returns on a long-term basis, not a per fund basis like private equity, or strategic generally can often be very, very difficult on price because they're using that kind of their own money and they've got this option to run it organically already or just grow their business organically, grow rather than buy. And so family offices have a long-term horizon on how they measure their wealth. And so that gives them more time to kind of see that return, maybe to pay a little bit more for it. It doesn't mean no one likes to overpay, but they're just not bottom feeders. Let me put it that way. And so that can be very, very, very helpful. And a fourth thing I would say is that they tend to be, this is just such a generalization, and obviously there's good and bad people everywhere and so forth, but they tend to be pretty fair. Again, I just hate to, I don't like to overgeneralize, but it is true that so an average person internally at a family office, generally there's less stress in their business. There's usually less reporting to investors. There's less pressure to get deals done. There's less, like if a deal goes bad, they're less likely to be fired the next day over or miss a promotion. They just so they can be easier to deal with. There's more continuity generally internally. So the people that you do your deal with are the same people usually. It's not like there's wild turnover at private equity firms, but you can kind of count on dealing with the same people year in and year out. So if you got post-closing issues or you stay on with the business, and we'll talk about that in a minute, it's helpful to have that, right? And to have that relationship and that consistency. And they tend to be fair and reasonable people. They are just and not necessarily very, very cutthroat. Again, really generalizing here, but as far as people to negotiate against on the other side of the table, it's a good draw usually. I mean, these are not weak people or people who are mailing it in, but just not overly difficult or challenging or argumentative. Let me put it that way. Okay, let's talk about the negatives of selling a business to a family office, negotiating to sell a business with a family office. There's a few, and a couple of them are flip sides, the other side of the coin of the pros of the benefits. So I mentioned earlier that they can move very quickly, but they can also move very slowly. They don't need to do your deal. They don't need to buy a business. Now, private equity doesn't need to buy any particular business, but they have a fund, and that fund has a period of time when the money needs to be put to work, and that fund has a life. They can extend it, but generally these funds have shelf lives, 7-10 years. And usually there's an investment period of a couple of years to put that money to work. And so they're anxious to do that. And in my experience, family offices don't have nearly that sense of urgency. They can move quickly, but they don't need to, right? And so that can be a little bit frustrating if they're taking their time. It's also negotiating leverage for them to just be easily able to walk away. They don't get what we call deal heat nearly as much as strategic and financial. Well, they are a financial buyer, but then private equity or strategic acquirers really get into a deal and they feel like pot committed and they want to get this deal done. That's the thing. And you just don't see that much from family offices. To the contrary, there's probably some amount of cold feet getting into a new industry, right? And taking a new risk. And they tend to not focus like private equity might in a particular industry. They might just pick off a couple opportunities. And in that world, it's almost easier to walk away unless they really love something. So there can be a little bit of, the process might not move as well as quickly as you think. And that might generally be because your deal's not going to get done, right? If they like the deal, again, I go back around to, they can and will move quickly. But there are times when they still like your deal and they're just taking their time to get comfortable with it or making sure they don't make a mistake. They also, another negative is there can be feel like a relative lack of resources, right? They tend not to be heavily staffed, and private equity will come in and they've got junior associates and things are moving quickly and lots of people working on deals. And that's not the case over at family offices. Now, they can bring in outside help and they can get deals done, but oftentimes, one person over there is sort of wearing a lot of hats, and that person is generally going to be pretty informed and intelligent and feel like, oh, maybe I need some other help, and bring some people in. And so their processes can feel somewhat disjointed or disorganized. Things might just not move as smoothly. And again, that could be a positive. It might move real smoothly just because they're not worried about doing this and that and the other thing. But sometimes it has that opposite feeling. It can be a negative. A third downside of dealing with family offices is that they'll probably want you as the seller to stay on, right? And that's, they're not going to go run your business. They've got a lot of other things to do to manage their generational wealth. However, they need someone to run it. So they've a deep industry with deep relationships and contacts. Often they've spent a long time cultivating relationships, and family offices are a desirable partner. Customer, they're difficult to find, by the way. They don't really want to be found. They're not looking for your deals necessarily, like venture capitalists and private equity will advertise, not billboards on the highway, but you can find them. Family offices are much tougher to find. I mean, there's lists and conferences and things, but they've got lots of opportunities. They're not, and they don't need to put the money to work by buying a business today. So it's just not a thing. So consequently, and because they're a desirable and sort of different player in this space, or just an investment space, they do venture capital and private equity type things as well. They don't just buy full businesses. So, and that is something that they would consider doing, is buying part of your business, right? So that's what they would often do. So because of this, they will generally often prefer that the seller stick around. Now, again, they could bring in someone else to run this business, but they're not going to run it. They're not going to do that. So, and this is to say with private equity, I mean, they're going to need you to stick around or have their own team. It's just with private equity, they'll often have a thesis around an industry, and they're growing a company in a particular industry that they already have a management team. When they come and get, what they call bolt-on or fold-in acquisitions and things like that. This is the same with private equity. The private equity people are not going to run your business, but they often have a thesis around a particular industry that they already have a business that they're growing. And so they're doing acquisitions as bolt-ons and tuck-ins and to grow this vehicle that they already have a strong management team for. And family office is probably not the case. So they're going to want you to stay on, or they're going to have to identify someone to step in. And so that could work real well if you've already got, if you, the seller, want to be done, but you've got a second in command, if you will, and she's ready to take over the business. That might be perfect, right? But this is a thing that they need to navigate that a strategic acquirer doesn't necessarily. Now, strategics and private equity, again, they might want you to stay on. There might be situations in which they need you to stay on. And almost every buyer wants you to be involved for a little bit of time, at least on an ad hoc consulting basis. But it's different with family offices, the extent of the need. And so that makes it make more sense when you do have that second in command, or you want to sell only part of your business. And that's great. A strategic is not generally going to buy part of your business. Private equity might, but a family office might often to keep you involved. So that's kind of a hybrid investment M&A deal, and they're open to that. And that goes back to flexibility. So there's the three sort of negatives of dealing with family offices. Okay, let's just talk about a couple other things just to think about when you're dealing with family offices. And some of this is just bolting on or layering onto what I said earlier, and one of the benefits of the drawbacks of dealing with a family office, and some of this is new material, but their management style tends to be very hands-off, right? And so that's, again, this is a world in which you're going to stick around. It can be great to deal with a family office. I mean, in this regard, they're not going to micromanage you. Private equity isn't in the business of micromanaging, but sometimes they will, especially if things aren't going well. They might get very involved in your business. Family offices, they don't want to do that. They're really not built to do that. Now, it's not to say they won't do that if they have to, but they tend to be much, much more hands-off if you're going to stick around. Relationships are very important to them. Cultivating those, that's very important. And so there are certain types of sellers. Look, just about everyone fancies themselves someone who's fair and reasonable. Not everyone is, but most people sort of think that they are. But there are some people's just negotiation styles. Their style in the world is really just a bull in a china shop kind of thing, right? It's just take no prisoners, very hard charging, nothing against that. Family offices tend to be very relationship bent. And again, don't read this as weakness or that they're not strong negotiators, but they're just not the pound the table scorch earth kind of people in the world. And so there's certain types of sellers that aren't going to resonate, right? It's family offices. And sometimes this is maybe goes to the point about it can take a long time to deal with them. Sometimes you got to cultivate that relationship a little bit. It's not to say that's always necessary. And again, they can move quickly, but relationships are very, very important to them. And they've got a lot of those. And so if you're staying on, this is another positive, I guess, but it's something to understand about them. They are going to be, even though they want to be micromanaging your business or that heavily involved in it, they often will have lots of contacts and people to introduce you to and be very forthcoming about opening up those doors. They can really be a pleasant experience to, work with. As I explained earlier, they're not heavily staffed organizations. They're not lots and lots of layers of management, right? So it's again, there's continuity. The people you deal with, that person often will wear lots and lots of hats, will be a bright person, but not need to bring in other people to get insights and experience. That could kind of take time, but they are not heavily staffed organizations. And then, as I said earlier, you need to know that they're not easy to find and target. Even harder, sort of talking again about the search fund video I did a while ago. There's a lot of overlap. They're very different vehicles in the world, search funds and family offices, very different. But in terms of their place in the M&A space, the role they occupy, there's a lot of similarities. And then that they're niche players, and there's certain types of businesses that are sort of more ideally suited for these two types of acquirers. Their search funds are easier to find in the world. A searcher is looking for a business. Family office is generally not. And so you might know the Walton family office, sure, but there's lots and lots of ones. There's so much wealth just on the shelves in these pockets of generational wealth out there, and they can be kind of difficult to find sometimes. But they're worth finding. And again, for some businesses, it's it is the ideal path for a certain type of business. So anyway, if you got questions, drop them down below. If you've ever dealt with a family office, have some good experiences, good or bad, I should say, let me know. We'd love to hear about that story. You can book a paid call with me at clarity.fm/Brett Cenkus. I hope you enjoyed this video and you watch more of them. Have a great day.